I was making that presentation to one of the largest institutional investors in the world, and they were trying to figure out how to access the US market. And one of their biggest concerns was timing. And the way these funds work is if you think of it, let's say a typical real estate cycle is 8 to 10 years. The way the money tends to go flooding into the closed-end private equity fund model just at the wrong time.
Yeah.
So when I was at Rockwood, and we weren't alone, we raised $1 billion in 2008. Well, in that case, we were very lucky, right?
Well, you were, because you actually could come into the market with, and buy up the bargains. But
we closed the fund with a big war chest of capital. But our fund before that, we also had $1 billion in 2006. And I'm not suggesting that Rockwood deliberately, tried to, invest the cash quickly, but the money goes flowing into the fund managers just at the wrong time in the cycle.
There's conflicts. Look, it doesn't matter who or what or why. It's the basic structure, right? The structure is that if you've got people who are running a closed-end fund or a private equity shop, and they have capital, they are only going to get paid when that capital gets deployed, and they're only going to get paid when it comes out of the cycle. It doesn't matter if it's closed-end, open-end. If you're aggregating institutional capital, that's how it works. And
they're investing for 3 years. So the state pension fund is saying, I'm giving you $50 million to invest over a 3-year time horizon. I mean, maybe even 4-year time horizon. It's very difficult to call that just right. With crowdfunding, or with the technology allows you to invest immediately. You don't have to have your capital sitting in a pool. And so I envision a world where, the institutional fund managers, there are now 4 or 5 different groups that have institutional quality teams. They put institutional quality projects up on their platforms to access the sponsors directly. And they have institutional, they're institutional quality transactions. So with not a lot of staff, because a lot of these groups, they might have $100 billion and 4 people on their team. So they don't necessarily have the bandwidth to, make 50 investments every year. But I would see a world where the institutional investors can, allocate directly from, using the various platforms.